Hello everyone, thanks so much for joining today. Today I do a more practical video. Wanted to show you how a typical finance organization in a non-financial company looks like. As a caveat before we get started, it really depends on the country how you set up a finance organization. Sometimes some of those departments, especially for smaller organizations, are merged because they don't have many people, employees working in this department. For larger departments, you may have additional departments as well. I have seen finance departments that also oversaw the IT function. So it really depends on the organization. But typically, you would find I have here 1, 2, 3, 4, 5, 6, 7 sub-departments overseen by the head of finance or CFO. Really depends on the type and size of organization. Okay, let's get started. So the first one, called Financial Planning and Analysis, FP&A. Key tasks and responsibilities are preparing budgets and forecasts, conducting variance analysis, basically comparing the actual performance with budgets, providing financial insights and recommendations, really to support the management to make strategic decisions. Lastly is analyzing trends in revenue, cost, and other financial metrics. So it's all about planning and analyzing. Some of the key tasks: building financial models, preparing monthly, quarterly financial reports for senior management, and also supporting capital investment decisions, ROI, payback period, and so on. Next one, accounting. I'm sure you are familiar or have heard about it. Accounting function is responsible for recording, classifying, and summarizing financial transactions. It's called bookkeeping. It ensures compliance with accounting standards such as IFRS or GAAP, or local general accounting procedures. It prepares financial statements, balance sheet, income statement, cash flow statement, and also managing audits and tax reporting. Tax reporting, I will come to this because it does it hand in hand with the tax department. Key tasks: preparing accounts payables, accounts receivables, payroll processing, reconciling bank accounts and ledgers. So these are the main responsibilities and tasks for the accounting department. If we look at Treasury here, this is all about managing the company's cash flow, liquidity, financial risk, handling banking relationships, ensuring the organization has sufficient funds, managing daily cash flows, managing short-term and long-term investments, arranging external financing such as loans, bonds, or credit facilities, and then depending on the size, whether it's an international company with many locations, overseeing foreign exchange and interest rate risk, if applicable. Then taxation. Really big companies have tax departments. Smaller companies, they do it internally and then they use an external tax advisor. But usually big companies, they have an own tax department, ensuring compliance with local and international tax regulation, minimizing the tax liabilities through effective planning, filing the corporate tax returns, and then managing indirect taxes such as VAT, GST, and direct taxes such as income taxes, conducting tax audits and liaising with tax authorities. And then also many business decisions have big tax implications, so the tax department usually acts as an advisor internally. Internal audit and controls. This is about the effectiveness of internal controls, ensuring compliance with laws, policies, regulations, identifying operational and financial risks, conducting internal audits of financial processes, monitoring adherence to regulatory standards, recommending improvements to internal systems, and so on. Then we have one cost management and cost controlling. It's a little bit similar to FP&A, but here really focused on the monitoring of the cost part, monitoring, controlling operational cost, analyzing profitability by business segment, product, project, supporting cost cutting and efficiency initiatives, setting cost budgets and tracking variances whenever the actual cost have surpassed budgets, calculating product costs, break-even points, analyzing department and project expenses, and it works quite closely with the FP&A function. The last one, again, if applicable, especially for bigger companies, and also if they are listed, for example, if they have shares outstanding, if they are public companies, then they usually have an investor relations department, which communicates with shareholders, analysts, potential investors, managing the company's image in the investment community, and then also, depending on the requirements, preparing and presenting the quarterly annual earnings reports, writing annual reports, shareholder letters, and coordinating investor meetings and respond to investor inquiries. So in general, in a mid-sized retail organization, FP&A would prepare quarterly sales forecasts and helps optimize store locations. Accounting would ensure the accuracy of records of inventory and prepares financial statements. The Treasury team would manage cash flows for supplier payments and negotiates financing for expansion. Taxation ensures compliance with GST and minimizes tax obligations on imported goods, for example. And internal audit would review processes to prevent fraud in high cash retail locations, and cost management analyzes product profitability and supports margin improvement strategies. And because we talked about a mid-sized retail organization, we have excluded investor relation. I hope you found this useful. I will do another video to tell you about the finance structure of a financial organization. There are a few similarities, but also a few differences. They have some additional sub-departments to comply with additional regulations, also because the business model is slightly different. I do another video for financial organization, banks, insurance companies. This is mainly for non-financial organizations. I hope you found this useful. Thanks so much. Talk to you later.